Good morning, ARMR Insiders. Welcome to the live trading desk. Let's go over, just wanted to start with a big picture view of the S&P there so we can see what we're dealing with, a 3-day sell-off right to the uptrend. Now, it's true, I hate 3 down days in a row. 2 days I can handle, 3, it almost always changes the risk monitor picture. 3 down days, bang, bang, bang. Now, it happened here, 1, 2, 3, took us right to the support line. Actually, in this case, went below the 50-day moving average and then reversed back above it. The 50-day is the black line, okay? So it's possible it's going to do it again. It's possible, and you didn't have to buy right here. You could have bought, which we did, right in here on that double test of the 50, okay? So here, cratered down. It could easily reverse, skyrocket up, stay in the uptrend. This is why we still have some investments in the portfolio. We'll see if the risk monitor changes and we have to start buying things again. So it's possible, we don't know what's going to happen next. We don't want to get over our skis in any one direction. Okay. Now let's go take a peek at our gamma locations, which have no doubt changed. So the S&P, we had gamma all the way up here. This comes down to 420. Oh, wait, 420 is here. Oh, 420 is the new call wall. 414 is 0 gamma. 413 is the vol trigger. So when you get above that, things can rip higher, theoretically, right? 413, 414, 405, and 400. So this is not here anymore. This comes down to 405 is right. 405 is the put wall. So the put wall has dropped down to 405. Wow, it's right here, right at the put wall. And this drops down to 400, which is absolute gamma. That's kind of off the screen. Oh, we already have something at 400. We'll get rid of that. All right, so 405, 400. So we're right at the put wall. And we're going to rally off of that. It's opening up around 407. And the next major bar is at 413. So risk monitor red, what am I looking for? Honestly, the first trade of the day in this case would be a short trade. The market runs, up into here, puts in a top at any location that makes sense to me and begins to roll over. I can see owning index puts for a trade back down to the put wall. NASDAQ, let's see what we got here. 440. 443 is still up here. $343. 340 is still the call wall. 330 right in here is absolute gamma and the vol trigger. 310. Whoops. This is 320. 310 is the put wall now. So the put wall really jumped down. I'm going to have to go like this. Like this. Move this up here and bring this down to 310. So we'll put that right at the bottom. So, ideally what I'm looking for are moves up to key locations and then put trades on. It's either a put buying on a move up into here that fails or index, getting long the indexes that come down to the put wall and hold. So we'll just have to see what the first trade of the day is. And in a market like this, we can't force it. If we don't get the setup we want, we just don't trade. And we'll wait for the next opportunity. Some days you just don't trade. Some days I just don't trade. The object is to trade what you're good at, not just trade every day because you think you're a day trader. Vol trigger goes down to 224, 210. Is that here? This drops to 210. I think we'll do this. So what we're looking at here is 224 is the vol trigger. You know, so theoretically, these things could run right up into these overheads up here. And you know, we would still see lower prices. And there's the bell. And they're off. Remember how negative the gamma got on the Dow? That was a real leading indicator. It used to be green and it just went red. See, VIX is a big sell-off at the open, so that's going to help the market rally. If I had to guess, if I was a betting man, I'd say the market's going up today. You know, you get that crush down to the 50-day moving average and you bounce off of it. Totally normal. Question is, what happens this afternoon? What happens into the close? That's interesting. Record shorts on LQD. Let's take a look at LQD. We used to watch these fairly closely. Why would you be? Who would short investment grade? The investment grade ETF. I don't understand why anybody would do that. Like, I feel like there must be a pair trade there. You know, I don't know errors. I don't even know really how that really helps me. Never been so bearish. LQD short interest at all-time high. But how do you know it's not paired against something else? Like, how do you know the fund manager doesn't have a huge basket of investment grade bonds and he's using LQD to hedge the risk? It's just something to think about. No, I know you don't. I mean, that's my point. Like, we don't. I often see these types of charts, and you know, it's so easy to extrapolate a piece of information out of a data set and bend it to your narrative. And so I try to while it's very interesting, I don't know exactly if I can get anything concrete from that piece of information. But it certainly is interesting, and it makes me think. TLT is just trading right in that range. Unless TLT breaks out of the bottom of this range, to me, it doesn't mean anything. It's just trading in a range that was pre-pandemic. It's the pre-pandemic range. Now, if this thing breaks down from this range, then you've got, a whole nother ball game. But this incredible run here and collapse here is really just getting out of the pandemic. And now if it trades in this range, okay, it goes back and forth. I mean, if it holds here, the market probably doesn't go any lower. S&P probably holds up, and it's just more rotation in this crazy world.